We'll start with the balance topics for the day, the job work, transitional issues and the TDS. Job work, there is a special procedure for sending the goods to your job work, wherein the principal will not be required to pay tax on the supplies which is made to the job worker, and the the principal will be eligible to claim input tax credit even though the goods are not received directly to him. So we just look at the provisions. A registered taxable person has to intimate the jurisdictional officer that he is undertaking a job work process wherein he is sending the goods to a job worker. So the procedure is that you have to intimate. The intimation could be on transaction basis or on an annual basis, which will be prescribed. The principal can send inputs and capital goods without payment of tax to a job worker and get the job work done. And from the place of the job worker, the goods can be transferred to another job worker for another subsequent processes. In this process, you don't have to pay any tax on the supplies of goods, where if you have followed the procedure of intimation of the officer. Now, after the job work is complete, the principal has two options: either to get back the goods to his premises, or he can sell the goods from the job worker's premises to his ultimate customer on payment of GST, or he can export the goods from the premises of job worker. The time limit, as explained earlier, 1 year in the case of inputs, 3 years in the case of capital goods. The time period will not apply for molds, dies and jigs which are sent to the job workers. For direct supplies of goods from the job worker's premises to your final customer, this can happen only if the principal declares the job worker's premises as an additional place of business. If the job worker is registered under the GST, and in case of certain notified goods, the principal has the option of sending the goods directly from the job worker's premises to a customer without declaring the place as an additional place of business. So the normal rule is that he can send the goods to the job from the place of job worker to his ultimate customer, provided he declares that place as an additional place of business. In case of certain specified goods and where the job worker is registered, then that additional declaration is not required. Principal is responsible for payment of tax and accountability of goods. The liability to pay tax is on the principal. Where inputs and capital goods are not received back within 1 year or 3 years, then it will be deemed to be a supply from the principal to the job worker, and the date of supply will be the date on which the goods were initially sent, and then you have to pay tax along with interest. Any waste or scrap which is generated during the job work can be supplied by the principal, provided the job worker is registered. Where the job worker is not registered, the job worker can dispose of the waste or scrap which arises during the job work process, provided the job worker is registered. Where the job worker is not registered, the principal will have to pay the tax on such waste or scrap. TDS, as I mentioned earlier, that there are certain government agencies or departments of central government and state government, certain notified companies and certain local authorities which will be notified to deduct tax at source on all supplies. So if we are supplying goods or services to these notified persons, they are liable to deduct tax. The rate at which they are liable to deduct is 1% of the value of goods or supplies. This will apply only where the total value of supplies in the year exceeds ₹5 lakh. So the total value is less than 5 lakhs, then the provisions will not apply. The tax deducted has to be paid within 10 days from the end of the month in which the deduction is made. If there is a delay or there is non-payment, then there is a provision for interest. TDS, for deducting the tax, there is a GSTR 7 has to be filed, and the certificate for deduction of tax has to be given in the GSTR 7A. The certificate has to be given within 5 days from the date of payment. So on the 10th you make the payment, so by 15th you have to issue the certificate. If there is a certificate is not issued within the time limit, then there is a penalty which is ₹100 per day, subject to a maximum of ₹5,000. With this, we'll come to transitional provisions, which will help us understand that how the existing credits can be transferred to a GST credits, and if any supply has been made prior to the implementation of GST, but the invoice of which comes after the implementation of GST, how is to be dealt with it. The general section, all the state and central officers who are appointed and continuing in office as on the appointed date, assuming the appointed date is 1st July. So all the central and state officers who are continuing their duty as on 1st July, they will be automatically migrated and they will be called as GST officers. Existing taxpayers, all taxpayers who are registered under the earlier laws which are subsumed under GST, have to migrate to the GST period. They will be issued a provisional registration certificate as on the date of implementation of GST. Once the provisional certificate is issued, it will be valid for a period of 6 months, or in such certain cases it will be extended. The final registration certificate will be issued once the required documents are submitted to the department and the inspection takes place. So after that period, the final registration certificate is going to be implemented. The registration certificate which is issued, if I am a dealer registered under VAT, and if I am not liable to register under GST because of my threshold exemption, the provisional registration certificate which has been issued to me shall be deemed to be cancelled if I make an application and tell them that I am not liable to be registered under GST, so please cancel my registration certificate. So then my registration certificate is going to be cancelled. Persons who are eligible to pay tax under composition scheme currently, if they are issued a registration certificate, provisional certification, they may opt to pay tax under composition, or they may opt to come under the regular scheme at their choice. So they may have to just make an application, and accordingly the final registration certificate will be issued. Carry forward of SENVAT credit and input tax credit. As on the date of implementation, that is the first, say assuming it's 1st July, if any registered taxable person other than a composition dealer, because composition dealer is not eligible to credit, so this provision will not cover that. The closing balance of SENVAT credit and input tax credit, which is declared in the return for the period of June, will be transferred under the GST law, subject to the provision that such credit should have been eligible under the GST law also. Now, we'll take an example. I have a basket of SENVAT credit. It includes all my credit on inputs, capital goods and input services. I have taken credit of 100 rupees. I have utilized 20. I have a balance of 80. I cannot link this 80 rupees to which input or which input service is it relating to. It's a basket. Now, how do we verify whether this particular 80 rupees is eligible under the GST law also? So this provision we will not be able to find out under whether this is the basket which I have is eligible under GST law also. But when we read the input tax credit, whatever is allowed under input tax credit under SENVAT credit rules is allowed under the GST rules. In fact, GST rules allow more credit. So this should not create any problem to us. So the credit of closing balance which I declare in my returns for the period of June will be automatically transferred to my credit ledger. If at all any excess credit has been taken in the month of June, when the audit takes place or scrutiny takes place, any excess credit which was taken in the month of June and which was transferred as GST credit, that excess credit will be recovered under the GST law, and the provisions of recovery of the GST law will apply. Unavailed SENVAT credit on capital goods. Now, under SENVAT credit rules, for capital goods, credit is on a 50-50 basis. So 50% is taken in the year of receipt, 50% in the subsequent year. If on the date of transition, that is on the 1st July, you have certain credit on capital goods which you have not availed in sense the 50% has been availed earlier and 50% has not been availed, that 50% can be claimed in the electronic credit ledger when the July returns is filed under the GST. Unavailed credit refers to the total eligible credit minus credit availed earlier. Credit of eligible duties and taxes of input held in stock. This provision applies to persons who are not liable to be registered under the earlier law, or persons who are engaged in supplying or providing exempted services or manufacturing exempted goods, or person providing works contract services and availing an abatement notification. So the abatement notification contained the provision saying that you are not eligible for tax on inputs. Because you are paying tax on a reduced rate, you are not eligible tax for taking credit on inputs. Or first stage dealer, second stage dealer and importer. So under first stage dealer, second stage dealer and importer, they don't take credit, they pass on the credit what they have paid. So for all these persons who are not liable to be registered or who are manufacturing exempted goods, as on the date of transition, as on 1st July, if their supplies are taxable under GST, then whatever inputs they have on stock, in stock, and the inputs contained in the semi-finished goods and finished goods, they can avail credit. However, the input services credit cannot be availed because it is presumed that the input services are consumed. Such credit can be taken in the electronic credit ledger subject to certain conditions. Conditions are that the goods which are there in stock must be intended for a taxable supply under GST. So when you pay tax under GST, the credit which has been suffered on your inputs can be availed as credit. The taxable person passes on the benefit of such credit to the recipient by way of reduced prices. Now, because I was not eligible to take credit, my cost had increased. So when my selling price included that cost of taxes which I have paid, so I was charging a higher rate. Once I am eligible to such credits, my selling price should reduce and I should pass on the benefit to the customers. So this is one of the conditions for availing the credits on inputs and inputs contained in semi-finished goods. So this has to be evident. The credit which I am claiming now should be eligible under the current GST law also, which we have mentioned that it will be eligible. Such person should be possession in the tax invoice or other prescribed documents, and such goods on which I am taking credit should have been purchased within 1 year from the date of appointed date. So from June 2015 to 30th June 2016, the taxes which I have paid, June 2016 to June 2017, 1st July 2016 to 30th June 2017, on those purchases I am eligible to take credit. Anything which is claimed excess will be recovered under the GST law. And if a supplier of services should not be eligible under any abatement under the GST regime. So if there is eligible for any abatement under GST regime, then this provision will not apply. Right? Right. Carried forward, yes. Hi. If you see this provision, you were not liable to be registered under excise because you are not doing any manufacturing. You are not even engaged in manufacture and sale of exempted goods. Can it be said that you are doing an exempted service? Because trading in goods is an exempted service. So you can take the benefit of this provision. Even otherwise, you can register as an importer now. No, I don't want to take the registration for 3 months. Then you will have to lose the credit. I mean, it might sound strange, but then just because you are not taking registration, you don't want to lose credit. But this is how the law has been drafted. So if you have to take credit on the imports and the goods which are lying in stock as on that day, you either register as an importer or take a service tax registration. Correct, then you will automatically fall under that category as you are providing an exempt service, because trading in goods is an exempt service. So then on the inputs you can claim the CVD portion and SAD portion on the stock as on 30th June. That has to be done from your records. No, not necessarily. You should be engaged in providing exempted service. Registration is not a must. No, here it says it's a registered importer. If which one?
If all trading goods are under negative or the exempted conditions and are not
it becomes redundant. Yeah. Because if you are providing a service, I mean, even if you're first stage dealer, you're still providing an exempted service because you're trading in goods. So it does not really make sense, but you can fall under the exempted service category. So there is an option. I mean, you have to, based on your costing records, as to and apply your FIFO, LIFO method and see which goods are there in stock and what was the tax paid at that point of time and avail the credit on that. Correct. So to that, on that particular goods, how much tax was paid, CVD and SAD, you can claim as credit. For in respect of input services, no credit. What is available as credit is only tax or duty paid on inputs held in stock or inputs contained in semi-finished goods. It does not talk about input services at all. So what has been reversed earlier has gone. Right? So if that disputed amount is there in, you have already availed credit of it, it is forming part of your closing balance, you carry it forward to GST period. Tomorrow if the appeal is not in our favor, it has to be recovered under the GST regime. I'll come to that point. There is a specific provision where if you are having a dispute and that particular amount has been reversed already and tomorrow in an appeal you win that amount, that much amount of credit will be available to you in cash. No, if that's what, if that credit, disputed credit is forming part of your closing balance. I mean, if you have not reversed it in your books of accounts, basically it's forming part of your closing balance. So you have transferred it to GST. In the earlier section we saw that whatever closing balance is there, it is being carried forward under GST. So if you do not win the appeal later on, that amount will be recovered under the GST provisions. Basically you will have to reverse that much amount of credit along with interest. If you have already reversed the credit and then you win the appeal, that much amount of credit which you have reversed, you will be getting in cash. Duties on inputs held in stock when switching over from composition scheme. So from a composition scheme, you want to switch to regular tax paying scheme. You get credit of inputs which is held in stock as on that day, as on the date of switching over from the composition to the regular scheme, and also inputs which are contained in the semi-finished and finished goods. Credits can be taken in electronic credit ledger. Conditions are, person should not pay tax under a composition scheme. Obviously you are shifting to a regular scheme, so you will not pay tax under composition scheme. These goods which are held in stock should be intended for a taxable supply under GST. The credit should be otherwise eligible under the GST law. Invoice should be there and such invoice should be not later than 12 months. Discuss input tax credit provisions. So where a person who is already under the composition scheme under GST switches over to regular scheme, he was eligible for credit on inputs held in stock, inputs contained in semi-finished goods and finished goods, and capital goods also, subject to certain depreciation. But from in the transitional period, if I am paying tax under composition scheme under the current law, that is under the VAT law basically, and if I switch over to regular paying scheme, I don't get input tax credit here. So that is the difference here. Where exempted goods which were supplied earlier are now returned back. So exempted goods which are supplied earlier, that is before GST was implemented, but are returned back after GST is implemented. Tax is not payable if such exempted goods which are cleared 6 months prior to the implementation date, that is from 1st January onwards, and such goods are returned back within 6 months from the appointed date. So the goods come back before 31st December and goods are identifiable to the satisfaction of the proper officer. So where you can link the goods which have gone out and which have come back. So if these conditions are satisfied, then the goods on which come back, tax is not payable. If goods are returned back after 6 months from the appointed date, that is, the goods come back after 31st December, it will be deemed as the supply by the person who is returning the goods. So the person returning such goods will charge me tax and supply the goods. Yes. So if the say goods come back after 6 months, then it becomes a deemed supply in the hands of the recipient of the goods. He has to charge me tax, and then I can take the goods, and obviously I can take the credit. Right. Sale invoice. Supply invoice. Taxable goods returned to a place of business after the appointed date. Where taxable goods are cleared before GST is implemented and returned after GST is implemented, if goods are returned back within a period of 6 months, and if goods are returned back by a registered taxable person, then whatever tax was paid under the earlier law, you can claim as a refund. Goods should be identifiable to the satisfaction of the officer. However, if the goods are returned back by a unregistered person, if it shall be deemed to be a supply in the hands of the unregistered person, he shall be liable to charge tax. If at all he is liable to pay. If he is under the threshold exemption, he can still claim an exemption. But it shall be deemed to be a supply in his hands. That is the condition, yeah. So 6 months, the goods should have been so cleared between January to June. Yeah, only such goods are covered under this. He has to charge tax subject to his exemption limits, but it will be a deemed supply in his hand. Whether you have to pay tax or not depends on whether unregistered dealer purchases is covered under reverse charge or not. That's what. If you already paid tax, ask him to register and take refund. Sorry, sir. That is subject to reverse charge mechanism which you have paid. So subject to that provisions. No, he is not, because the provision clearly says that if it is returned by any person other than a registered person, then the main supplier can claim refund. So it's not a deemed supply in his hand. Refund, and since it's an excise duty which we are talking about, it will be paid in cash. Inputs semi-finished goods which are removed for job work before the appointed date and received after the appointed date. Inputs and semi-finished goods which are removed for any processing prior to the appointed date, that is prior to 1st July, and if they are received back within a period of 6 months or an extended period of 2 more months is allowed, then there is no tax payable. I think there is something missing. I think this line you can ignore, manufacturer and. However, if the goods, the manufacturer, tax is not payable subject to a condition that the manufacturer who had sent the goods earlier and the job worker both declare in a statement saying this is the amount of goods he is holding on behalf of the principal. So there is a statement which is prescribed. They have to file a declaration within the prescribed time, and then the tax is not payable if the goods are returned back within the 6 months or 8 months. If the goods are not received back within the period of 6 months or 8 months, input tax credit which is availed by the principal on such goods will have to be reversed. Finished goods which are removed for carrying out any further process and returned after the appointed date, the conditions are the finished goods should have been cleared without payment of duty for carrying out certain processes, and if they are returned back within a period of 6 months, then such tax is not payable. If they are not received within the prescribed time period, then input tax credit should be reversed by the supplier. Supplementary invoices when there is a price revision. So if the contract is entered prior to the appointed date and the price revision takes place after the appointed date, if there is an upward revision in the price, then a supplementary invoice has to be raised within 30 days from such revision and tax has to be paid under the GST Act. If there is a downward revision in the price, the supplementary invoice has to be raised or a credit note has to be raised within 30 days from the date of such revision. This credit note can be used for reducing the tax liability provided the recipient reverses that much amount of credit. So the matching concept will apply. I reduce my output tax liability subject to my recipient reducing input tax liability. The refund claims which are pending under the earlier law will continue to be adjudicated under the earlier law, and any refund which was due to me will be received in cash, and any credits which have been rejected will lapse. Under the SGST law, it does not say the credit will be given in cash, it says as per the provisions of the Act. So it all depends on the each state act how the credit has to be given. Refund claims in respect of goods or services exported and services not provided. So if I have exported certain goods before the appointed date and the refund claim I filed after the appointed date, then the refund claim will be governed by the provisions of earlier law. Any amount which is to be received by me will come in cash, and any amount which is rejected will lapse from my side. If I have claimed that credit as a carry forward under the GST regime, then I will not be receiving the refund amount. If certain services on which I have already paid tax, but such services are not provided, then you can file a refund claim for that amount, and the refund claim will be disposed of as per the earlier law. Any amount which accrues will be paid in cash. So wherever the central government is giving any money back, they are going to pay in cash. Wherever the state government is paying back any money, it is going to be as per the provisions in the each state act. Claim of SENVAT credit to be disposed of under the earlier law. So as we mentioned earlier, if you have any dispute which is going on in respect of SENVAT credit issues, it will be disposed of in terms of the earlier law. Any amount which is to be recovered will be recovered under the GST regime. Other provisions of GST will apply for recovering of the tax. Whatever amount is recovered, suppose I was liable to, I am liable to reverse 100 rupees of credit. That 100 rupees will not be eligible to be claimed as a credit by any other person. Amount admissible will be paid in cash or as per the provisions of the state law. If any appeal or revision is pending before for determining my output tax liability or my tax payable, that also will be continued to be governed by the earlier law. The other provisions are same as the earlier law. Wherever as per the assessment proceedings I am eligible to certain amount of refund, then that amount, or if I have to pay certain amount, if I have to pay certain amount, that will be recovered under the GST regime, or if I am eligible to certain amount, cash or other mechanism. No, why cash does not mean cash. It's a credit to your account. Now, we discussed earlier that in order to carry forward the credits, you have to file the return for the month of June. If in the month of June or any of your earlier returns, because of some revision, there is an amount payable on account of revision, then that amount will be recovered as an arrear under GST. If any amount of refund is due because of that revision, or you claim certain excess credits, then that amount of credit will be paid in cash or in accordance with the law. So there is one thought process here. So when I file my return for GST for the month of June and I have lot of credit with me, I don't show any credit. I mean, whatever is opening balance of the period for May, I take that only. I don't show any fresh credits for the month of June. Then after I file the June return, the carry forward amount is credited to my GST ledger. I file a revised return for the month of June, and whatever amount of credit I claim there, that I can get in monetary terms, in cash, and it does not sit as a credit in my accounts. So the credit can be converted into cash here, but how soon you will get it, there is no answer to it. No, you file the June return, because then you will not be eligible to carry forward the opening balance. June month's credit, you can push it and revise the return so that you can get it in cash, but that's a risk, because you may not get it in a reasonable amount of time. In terms of long-term construction and works contracts, any supply which is made on or after the appointed date and the contract is entered prior to that date, the liability for payment will be under the GST law. In respect of progressive or periodic supply of goods or services which are supplied on or after the appointed date, and where the consideration has been wholly or partly received prior to the appointed date, and duty or tax has been paid earlier, then I don't have to pay any tax under GST.
Certain services are modified to gazettes and say these services will not be taxed. Typically, if you are servicing BMRCL, certain services are exempted from tax.
Right.
Prior to GST period. Now, post GST, till the old notification won't put or
No. The notifications which were issued were under the Finance Act 1994 will lapse now. Once the GST is implemented, will lapse. Those notifications will lapse. So unless there is a specific exemption under the GST law for supplies made to BMRCL, it will not be exempt. That's under customs or excise? No, those will lapse, and if the exemption continues under the GST law, then it will be continue to be exempted. If not, it will be made taxable. Now we'll have to go back to the point of taxation. At that point of tax, where the point of taxation is, whether it was liable to tax or not. The taxability of supply of goods in certain cases, where the point of taxation, or to the extent the point of taxation arose before the supply of before the GST law was implemented, tax to be paid under earlier law. In any other case, tax has to be paid under GST law. So to determine the point of taxation and whether the point of taxation is before 1st July, you pay tax under earlier law. If it is after July or on or after 1st July, you pay tax under GST. Whichever is beneficial. It falls. I think the repeal and savings clause will help us. The earlier law will prevail. Credit distribution by ISD. Input services which are received prior to 1st July, and invoices for such supplies or invoices for such services are received after July, the ISD can distribute the old the service tax which was charged after the appointed date. Deduction of tax at source, where invoices were issued before the appointed day and payment for such services is received on or after the appointed day, then TDS shall not be deducted. So where I was liable to deduct TDS and invoice is issued before implementation of GST, but payment has been received after implementation of GST, TDS is not required to be deducted. Transfer of unutilized SENVAT credit in case of centralized registration. So where a taxable registered taxable person has a centralized registration under the earlier law, he obtains a registration under the GST law. Now under the GST law, he'll have to take multiple registrations. He has an option to carry forward the credit which is credit which is in there in the return. He also has an option to transfer that credit to each of the units of his choice. So if I am a centrally registered unit, I have 5 units and I have say 1 lakh worth of credit, I can transfer the credit to each of my units. I can say I can retain 20 lakhs, or I can retain 20,000 and I can transfer the other credits as per my wish. So there is no formula prescribed here, but you can transfer it according to your wish here. Tax paid on capital goods or goods which are lying with your agent. So the agent is eligible for taking the credit on of the tax which is relatable to such goods. The credit is eligible on any capital goods or goods which are lying with the agent. Such goods are lying at the premises of agent at the appointed date. So as on 1st July, whatever is the goods which are lying with the agent, the goods or capital goods, the agent is eligible to claim the credit which is relating to such goods. Condition is the agent must be a registered taxable person, that is when he will be able to claim the credit. The details of goods lying in the premises of the agent should be declared by the principal. The principal should reverse the credit which he has availed on such goods, or he should have not availed credit on such goods. So the principal reverses the credits and the agent will take the credit, because what happens is when the agent gives the goods back to the principal, he will have to charge GST under the GST law. So the credits which are relating to such goods, the agent is eligible to claim the credit, provided the conditions are satisfied here. Goods sent on sale or approval which are returned after the appointed day. If the goods sent on approval basis, and such goods should be sent within a period of 6 months prior to the implementation date, and are returned back within a period of 6 months or 8 months, then tax is not payable when the goods are coming back to our office. If the goods are returned back after a period of 6 months or 8 months, the tax shall be payable by the person who is returning the goods. So it shall be a deemed supply in his hands and he will be liable to pay tax. Person sending the goods liable to pay tax. Input services which are provided under the credit was claimed under the earlier law, but because the payment was not made within the period of 3 months, you are liable to reverse the credit. So if you make the payment to your vendor in the GST regime, that is after 1st July, you are eligible to take the credit again, provided the payment should be made within the period of 3 months from the appointed date. So wherever we have not made payments to our vendors, where we have claimed credit, this point becomes an important point, because you have to make the payment within 3 months from July, then only you will be eligible to reclaim the credit. Services or interstate supply of goods, where the supply has taken place or the initiation of the supply has taken place before the appointed date, but the supply takes place after 1st July, and if I have paid the tax in full earlier, then under the GST regime I don't have to pay tax again. So this will apply basically for an import of goods. So if I paid the applicable customs duty by 30th June, then I don't have to pay the tax again when I pay the goods are cleared in the month of July. In case of interstate supplies, if a part payment has been received, to that extent I have to pay the tax under the old regime, and for the balance payment I have to pay the tax under the current regime. Where the transaction has been initiated before appointed date, that is, if the transaction has been initiated refers to purchase order has been released or invoice has been raised, but the supply or the sale takes place after the GST is implemented, then to the extent I have received the payment earlier, that is prior to 1st July, I have to pay tax under the old law, and to the extent the balance amount of payment, I have to pay tax under the GST regime. That's under the GST regime, because under the earlier law it was exempt. So points to reconsider. Now after having gone through the important provisions, we have not discussed the provisions relating to demands, recovery and assessments, because those provisions may not impact us immediately, and also those provisions may be changed or tweaked to suit the state requirements. But the normal period of limitation under the GST regime is 3 years. That is, even if there is no fraud, collusion, misrepresentation, the department go back to 3 years and demand duty, and the extended period of limitation is 5 years. And the assessments, what we understand is, it will be both the center as well as the state are going to monitor the assessees. For a turnover of up to 1.5 crores, the ratio is going to be 90:10, where 90% of the assessees is going to be monitored by the state and 10% assessees is going to be monitored by the center. Where the turnover is more than 1.5 crores, the ratio is again 90:10, where 90% of the ratio belongs to center and 10% of the assessees belong to the state. So there could be a situation that in for 1 year you are monitored by the center and the other year you are assessed by the state. So to that extent there is an issue. Certain points to be considered. Now if I have a registration in all the states, or if I have a warehouse or depots in other states, do you really require to register under GST, or can we eliminate those? Because as we discussed, interstate supplies of goods is going to become a more beneficial provision because it can be set off against both CGST as well as IGST. So whether you really require that kind of a warehouse or a depot in other states, because a separate entity is equivalent to 36 or 37 returns. ISD. Now when we discussed that ISD issue, that whether you really distribute the credits or show it as management or consultancy services provided to other units and take the credit of CGST, SGST which is charged under the state and charge an IGST invoice. So whether ISD is really required or you show it as a supply of service from the other unit, that also has to be thought about. Trader, can it avail the credit of excise duty which is paid on inputs which is lying in stock? As we discussed, trading can be treated as an exempted service, and under section 169 he will be eligible to claim the credit on inputs which is lying in stock, subject to documentation. Exemption, if at all there are any exemptions and if it is applicable to you, we'll have to be 100% sure that the exemption is applicable to us. If not, the demand could go up to 45% or 50%. 18% is a normal rate, plus 3 years of interest is about 50%, plus penalty. So we have to be really clear whether we are eligible for exemption or not. With this, we close this session. Thank you for a very patient and unconditional listening. Any queries, we'll be glad to answer. Right. Thank you.